Welcome, everybody. This is the Trader Circle. What's today? The 9th? March 9th, 2025. My name is Advent or Desi, depending where you know me from. I am not a financial advisor, not yet anyway. For those who are new here to this class, pretty much can ask me whatever you want and we'll go over it. So, whatever you want to ask me, now's the time. Because I see a bunch of people always like, oh man, I want to know how to do this or do that. And you always ask me in the classes that we don't talk about anything. So here's your opportunity. With that being said, you're more than welcome to type any questions in the chat. You can come off mute and talk on voice if you want to. I do have some questions here that some people have in the questionnaire. And as always, I do appreciate when you guys do put in the questionnaire, so I have something to prepare myself for. But yeah, let's see. Let's go in order. Let's see who's here. All right, Leo doesn't look like he's here. And if you are here, let me know. Tim doesn't look like he's here. Oh, actually, Tim, you are here. Tim, was it you that you asked about? Um, so you're new to the strat and you've been watching my videos and you wanted to learn a little more about me. Is that you? Or was that somebody? Was that another Tim?
That was me. You got it right. Yeah,
Sweet.
I am. I do have some questions for you that I've been following your videos and trying to paper trade and do some actual trades, but I have more questions about mostly about entering and exiting on certain setups. And then I did have specific questions about in the morning when the market first opens, there's oftentimes big swings. So if you're following a trade that's seems like it has a good setup the day before, how long you're waiting to enter that trade? Are you waiting for the market to settle after a few minutes, or are you getting in right away? So I have a whole bunch of questions that way, but that's kind of the start of it.
Sweet. Let's do two or three and then we'll go to somebody else, then we'll come back.
Sounds good.
I just need a specific question to start with, and then we can go over it. You kind of gave me like five. Which one do you want to go over first?
Um, let's do, yeah, if you've got a setup that looks good for the next day, whatever setup that is,
Hmm.
how long are you waiting to enter that? Are you getting in immediately, or are you waiting for the market to kind of settle out in the morning?
Great question. So let's assume, for the sake of the conversation, this is NVIDIA's chart on the 4 hour. So if we're looking for, we're right now it's a 3-1 setup. So tomorrow it's either going to trigger a 3-1-2 up or 3-1-2 down, or it can trigger two down and then go three up, so on and so forth. So let's assume that tomorrow at market open, it opens up as an inside bar. As soon as this next 4 hour candle breaks either the high or the low, we get in immediately as strat users. We don't wait, um, because if we do wait, it's gonna be too late, right? The trader has already left us, and you never want to chase trades either. So, to your question, if it opens up as an inside bar and then it triggers us, I'm pretty much getting in as soon as it triggers us. So like immediately, I'm not waiting for a candle to close, none of that. Um, Now, let's say, I'm sure there's another question you probably have. If it gaps up or down, right? Let's say if it triggers 3-1-2 up, but the candle opens up, let's say over here, as opposed to, being like an inside bar and then it triggers two up. So if it triggers a 3-1-2 up and it gaps, I'm no longer getting in that trade based on the 4 hour. What I'm instead gonna do is I'm gonna go on the 5 or the 15-minute time frame, and I'm gonna look for a bullish TTO in this case, or a bullish Momo Hammer setup.
Perfect. That's exactly what I was. Those, yeah, you hit both the questions there. Thanks.
Sweet. So yeah, for strat users, we never wait for candles to close or anything like that. We just get in as soon as the candles break, whether that's to the upside or downside or whatever setup it is. Inside bars, we never enter on because there's no trigger. It's just another candle of consolidation. So we always wait until there's a trigger. And for those who may be new to the strat, this happened to me and to others who were new as well. Highly recommend don't ever anticipate a strat trade, meaning if it's a 3-1 as we have here and you think it's going to go 2 up, do not buy calls until you get confirmation that it's broken that high. Because when I first started, I would think it's going to go up and then actually it goes 3-1-2 down. And now I'm in calls for when things went short. So never anticipate, just react to what price is telling you to do. Cool. What other question did you have, Tim? And then I'll go
So,
to
just one question, Daisy, sorry. On the same topic, are you gonna say keep the same rules on any time frame?
when you say rules, what specific rules?
Okay, let's say like you got like it, we won, let's say you're two up and you intend to have a long position. If you're trading on a lower time frame, are you gonna do the same thing?
Pretty much. It doesn't matter if you're on the 1 minute to the 1 day to the 1 week or the 1 month. We get in as soon as it breaks. Even though I would not recommend the 1 minute for the strat personally. Anything under the 5 minute is just too much noise. You can test it out and paper trade it if you want. I just don't find it as efficient in my experience.
All right, appreciate that.
5 minutes is okay, or is that also too much noise?
Sorry, Kishore, you mentioned what will my stop loss be in the case if I take this 3-1-2 up?
Yeah, yeah. What would be your stop loss?
That depends on. So you can do. I would probably do one of two things, depending what my risk tolerance is. Now, let's say that I'm in this trade on the long side. You can either use the setup candle as your stop loss, like the entire setup candle. So let's say if I'm aiming for, let's say this high for the sake of the conversation, and I get in as soon as this inside bar breaks to the upside, my stop loss could either be the bottom of the inside bar, so the bottom of the setup candle like this. If you want to be a little tighter with your stop loss, you can use the 50% fib level as your stop loss. So 50% of the inside bar like that if you want less risk. For me, if I were to take this trade, I'm okay with using the 1 bar because that's just what, $2, almost $3, like 3 deltas as a stop loss. I'll be okay with that trade. But again, it's really up to your risk tolerance. So I would either use the 50% of the setup candle or the bottom of the setup candle, depending what the setup may be. But in this example, this is what I would probably use, just the bottom of the one.
And what would be your take profit? When would you?
So we could just keep it simple with the strat, previous candle highs. So this wick right here, I would probably do this little gap fill as another target just because. Then this body, and then this wick, and then so on and so forth. So you have all these targets on the way up. And then based on its ATR, looks like Nvidia is moving about $6 a day. Let's assume that we have a pretty straightforward day. Let's say what? One, two, three. The third target, if you're skipping this little gap fill, it'll be what, about $5 and change, which is within its ATR. So we at least should be hitting at least one or two targets at the very least based on its ATR. So with the strat, it's pretty straightforward. Your targets are the previous candle highs if you're going long, or previous candle lows if you're going short. Your stop loss could be either the 50% of the setup candle or the bottom of the setup candle as well, or even the trigger candle if you want to keep it super tight. So let's say, let me get rid of these fibs. So let's say if the candle opens up here, you can even use the bottom of the trigger candle or the top of the trigger candle as your stop. Depending what I'm trading, I might want to give it more room. Like if I'm trading Tesla, I'm probably not going to use the bottom of the trigger candle because Tesla tends to be a little volatile. But that's just from my experience with trading Tesla. So I usually use like 50% of the candle or the other side if it's within my risk tolerance. Or I'll reduce my position size so the dollar amount is what I'm comfortable with when I'm with my risk anyway.
Okay, thanks. Got it.
And are you looking to mostly day trade with this sort of setup, or are you swing trading with this setup?
So if it's like a 4 hour setup, I'm generally just going to be day trading it. Usually, if I'm swing trading, I'm going to be looking for setups on the daily or the weekly time frame. You can use the 4 hour if you want to. I personally just prefer the 4 hour for day trading. Let's say if there's a setup on the daily or weekly that I'm looking at, sometimes I might get in earlier on the 4 hour in anticipation of the weekly or daily triggering for that swing trade. But generally, a daily or weekly time frame break for my swings.
Thanks.
Of course. All right.
One follow-up question. Let's say the setup triggers, but there is a news event. Let's say 4 hour setup triggers, and there is a news event in between. Do you ignore the swings during the news event, or if the news event hits your SL, you would just take it out, regardless if it's news event or not?
So the question is if there's a news event and it hits my stop loss, if I would get out of the trade or if I'll stay in because because it hit my stop loss because of a news event.
Yes.
If it's my stop loss, I'm getting out no matter what, whether it's a news event, whether it's just price or whatever, it doesn't really matter. I'm getting out as soon as it's my stop loss price. While I do keep news in mind, again, it doesn't matter to me if my stop loss is hit, regardless of why it got hit, I'm gonna get out. We should never ever be married to any single trade. There will be many more, and one trade shouldn't make or break you. Let's see, JT. You may have mentioned this, but if you take a 4 hour trigger, do you anticipate being in that trade for at least 4 hours? Um, yes and no, mainly because I usually take this setup on Tesla. For those who trade Tesla based off my watch list, you would notice that um, you'll notice that the targets that I put out, they're usually getting hit within 5, 10, 15 minutes. Sometimes even within 5 minutes, like three or four targets would be hit, depending, how volatile Tesla wants to be. But generally, I'm not going to be in a position for more than like an hour or two, realistically. Even the 4 hour triggers, on average, at least based on my journal, I'm in those trades anywhere between, I'll say 20 to 25 minutes. Anything that's more than about 10 or 15 minutes is probably because I'm holding a runner. But generally, within 10 minutes, it's already hitting targets. Of course. If you are sniping, would you look at the 4 hour? Um, Not really. The 4 hour is a little too slow for sniping. That's usually reserved for like the lower time frames, usually like under the five, which I personally don't do. So I just avoid it. Are you trading 4 hours generally for the 15 to 25-minute trades? Negative, Ryan. I only trade from 9:30 a.m. Eastern time to 12 noon. So maximum 2 hours and a half a day. Anything more than that, my brain gets fried. And most of my money is made in the morning time anyway, so that's all I trade. Hopefully that answered your question, Shane. So yeah, I'm not really looking at the 4 hour if I'm going to be sniping anything. Sweet. JT, I'll answer your question next. Let me just get to a question from the um, questionnaire for those who mentioned it there. I know Kia's here. Kia, did you put your name as Nakia?
No.
Oh, that's the other Kia then. All right. It looks like she's not here, at least from what I see. Shane, you mentioned setting up your charts and stop losses. What specifically did you have? Like what specific question in regards to setting up your charts and stop losses?
I think I just don't know how to do it, period. I'm sitting there watching, and when I see things going the wrong direction, I'm keeping an eye on it. And I know, actually, you know what I've been doing, and you can tell me if this is a bad practice. I use my paper money account to see how it's doing. And if it looks like it's not doing well, then I don't go in on the trade. I give myself a few minutes to see, what direction I really believe this is going, what it's showing me versus what I think it's going to do. And if I see it going the opposite direction, then I say, hey, that's the direction I need to go. And that's what I invest in my account. So I use the paper money account to as a backup to me also looking at formations and I always feel like I'm sniping because I'm sitting there watching. I look at the 4 hour and then I look at the 5 minute at the same time, and I'm like, what is it telling me? What is it telling me? I don't usually I don't purchase a trade that's going out the whole week. I'm doing day by day, and that's been working for me,
Mhm.
and it's been consistent. And I know we shouldn't be married to a particular stock, but there's one stock that gives me my quota every day, gives me what I'm looking for every day. And so I just continue to use that. It never fails, whether it's a call or a pull, when I get in around the same time, almost every day, it gives me what I'm looking for and I get out and I'm done for the day.
Um, I'm a big believer of if it works, if it ain't broke, don't fix it.
Mm-hmm.
Um, I personally don't do what you do in the sense that I'm getting in. If it's a long or short setup, it is what it is. I'm not gonna like test the waters because to
Mm-hmm.
me, just from what I'm getting, this could be wrong for you, but just from what I'm getting of that is if you're testing the trade, that tells me that you're not fully confident in the setup. And in my opinion, if somebody isn't fully confident in a setup, that they shouldn't be getting in a trade at all. Um, to your comment about not marrying a ticker, I am all for marrying tickers. If that's where you
Okay.
make your money, hey, keep on doing it,
Okay.
right? For me, I
Right.
mainly trade YM for futures and RTY. So the Russell and the Dow Jones. And I love them. Like they're my absolute go-tos. Every now and then I'll go to like ES, like recently for the 15-minute orb. But other than that, like 95% of my trades are YM, RTY, and Tesla. And that's pretty much it. Those three in rotation. And Tesla is like just for options. Like I don't do anything else for options unless I'm selling premium if there's a setup on another ticker. But for Tesla, that's my go-to every day. So if whatever ticker you're trading works, hey, please keep on doing it. Whatever brings in the money. So for me, I wouldn't do what you do and like using the paper account to kind of test it. I'm just getting in when I'm supposed to. If it works for you, hey, keep on doing it. What I would say is if there's a way for you to refine the your process so you don't really need to like test the waters because it's either yes or no when you get in the trade, right? And if
Right.
I get in a trade, let's say if I get in this 2-1-2 up for the sake of the conversation, and I'm testing the trade and it's going in my favor, and then I get in my live account, I might be getting in 10, 20% later when I'm supposed to. Like if the paper is up 10, 20%, and then I'm getting in later on my actual account later when I'm supposed to. So for me, I'm just, just get in when you're supposed to and just go from there.
Yeah.
Good stuff. And with your charting, what question do you have regarding charting? Is like setting up your charts? Like for example, this is how my setup looks like when I'm day trading. Do you kind of mean like setting something up that works better for you, or what exactly?
I actually, I've all my charts look like this too. The two with the numbers and yeah, they look like this.
Oh, do you
The
mean?
part I haven't done is I think what I should do is have an alert, more like an alert when I get to where I'm trying to be, so I can just get on now. But sometimes I get excited. I was like, hey, let's see what happens. I need to, that's I guess that's the gambler in me, but
Oh,
I
you better
think I'm
put that
going
on
to just
your bed.
put those notifications. I'm sorry, what did you say?
That gambler got to be put to bed.
Right, right.
So what I would say is, I guess, is a better question would be like, how do I prepare my charts for the day? Is that more so what you mean?
Yes.
Cool. So generally, as you can see here, I have the 5 minute up here, 15 minute, 30 minute, and then the 1 hour. The 30 minute and the 1 hour when I'm trading futures is on extended data, so I can see what happened pre-market. The 5 and 15 minute is on regular trading hours. And what I'll do is I'll mark off the 4 hour high and low just so I don't need to have that time frame up because I already know that when market opens, if price is, let's say, below this level, I already know the 4 hours bearish. If the price is above this, then I already know the 4 hours bullish. So I don't need to go back and forth between time frames because it gets a little annoying and then resetting the chart and stuff like that. So if we opened up tomorrow and price right now is on the 4 hour, I can see that we're bearish on the 4 hour. And then more than likely the 1 hour is going to be bearish as well. So I don't need to like flip back and forth to see, what it's doing, right? So that's one thing that I do. As Carmel mentioned, definitely set up your alerts because we want to be ready. We don't want to be fumbling with our alerts when we're supposed to be getting into trades, right? You want to make trading more efficient for you. You don't really want to be scrambling at market open when you're really supposed to be prepared to go, right? So also making sure you're aware of what news comes out or what news is coming out so you don't get blindsided. Like somebody messaged me, I think it was a Friday or Thursday of last week. There was like some news that came out at 9:45 or 10, and that thing just spiked in the opposite direction. And they're like, "Oh my God, I don't know what happened." It's like you should know what news is coming out every single day because then that happens and then you lose 50, 40% in a split second, which of course we want to avoid. So some things that you can do to prep your charts for the trading session. Cool. All right, let's get some chat questions. How to use fibs? Do you mean like how to draw them and how to like, I guess giving it like an example of how I would use them? Cool. So there's many different ways that you can use fibs. I am limited on what I can say about the fibs, on how I use them, because I'm sworn to secrecy by one of my mentors, but I'll keep it simple for you guys. Um, let's get the regular fibs that people usually use. So you can use them in many different ways, right? You can use them for, like I mentioned earlier, if you want to get like a stop loss. Let's say if you want your stop loss to be 50% of the previous candle, you could just mark that off. You can get additional levels for whatever reason. Let's say you're in a setup on the following day and you want to use some targets of the previous day. You have them plotted on the fib level. Let's say you want additional targets. So let's say, for the sake of the conversation, looking at Tesla, I can mark the previous swing high and the low that we're at now for additional targets to the upside, right? So the way I like to kind of think of like swing highs and swing lows is, for those who trade the strat, you can kind of keep it simple. This is the highest point before price reverse back down, and this is the lowest point before we're anticipating there's going to be a reversal to the upside. So I'll mark off this point right here and then this low. So now the strat targets are pretty straightforward. The previous candle highs, right? So this high, this wick, and then this high up here. However, between this wick and this high over here, even the body, there's a big space, right? Which would be, that's about $15. I personally am not going to hold my full position or part of the position for 15 points unless it's a runner, right? Let's say I have 4 contracts left. I'm not going to hold 4 Tesla contracts for 15 points, especially if it's a weekly, right? So with my drawn fibs, now I have 2 additional levels that I can take profit at. So I can take profit at this fib level here and this fib level here as I wait for these targets up here to hit. So those are some ways you can use fibs for. And then let's say, let's see. So on the weekly, we got this high and this low. So for some people who may be anticipating a dead cat bounce or a bearish TTO, they might want to front run the move when it hits the 50 fib or if it's the 61 fib. Really depends on the individual. Again, we really want to wait for proper confirmations, but you can use that, right? So if it were to come back up, there's a chance it might reject off the 50 fib and then head back down. So it comes up and then heads back down. So just some quick little examples. There are YouTube videos that go in much more detail than this, but but yeah, that's I'll leave it there. What's the other fib secret? Definitely can't speak on that unless you want to pay for my lawyer fees because he made me sign an NDA. So the only way you can ever hear about it from me is if you get his course or his mentorship, and then we can talk about it freely because we both signed the NDA. Anyway, let's move on. Let's see. Wendy, you asked, do I have a daily amount or just go with the market flow? So risk wise, I usually keep my risk like between 4 to 500 a trade. Usually when I'm trading futures. For my options account, I'm a little more flexible because that account is a lot bigger than my futures account since I've had it for a while. In the terms of like daily targets, I don't like the idea of daily targets because it would invite me. I know myself already. And what I've seen in others as well, where let's say if my target for the sake of the conversation is $1,000 a day, I don't know if I'm going to make $1,000 a day. That's up to the market, right? If I get into a setup and the chart or the setup only gives me $200, then it is what it is, right? I'm gonna take my $200 gracefully, right? There's people who work their butts off for $200, and we made that, and we can make that in what, 30 minutes, 10 minutes, 5 minutes, maybe even less. And even then, I only trade for 2.5 hours a day. If the if the if the day only gives me $200 a day, I'm taking that. I used to work 8 hour and maybe like 10 hours at my last job, to make about $200 a day, and that's like 8 hours and a half, right? And I'm making that in less than an hour. So always got to be grateful for whatever the market gives you. So if the market gives me $400 today, hey, fantastic. If the setup was there to allow me to get $1,000, even better. If it only gave me $50 that day, it is what it is. Again, it's not the end of the world. Just take whatever the market gives, because you don't want to get into the cycle, which I've seen people go into, where let's say the setup only gives them $50. And I'll give you a story. So somebody messaged me the other day, a recurring pattern with this individual, where they refuse to be okay with what the market gives them. So the setup gave them $50, but they wanted more, right? What ends up happening? They don't take their profit. They instead end up losing $200 on the trade. Logically, makes zero sense. Does not make sense that you don't want to take $50, but you're okay with losing $200, right? Whereas with this individual, if they were to secure all of those $50 that the market gave them, at least from what I know, from what they've shared with me, they probably had at least $2,000 of profit at this point. Instead, they probably have close to like $5,000 in losses, maybe more, from what I know. So, whatever the market gives you, you take. Sure, if you want to make the $500,000, $5,000, $10,000, $20,000 days, you need to grow your account to that level. You're not going to get it just because that's what you want, especially if your account doesn't even have the capital to reach that, right? You got people with $200 accounts wanting $500 days. That's not going to happen. Unless you trade SPX, then, sure, that can happen. But I don't recommend SPX with a $200 account at all. So stay in your lane, grow your account properly, and just take whatever the market gives you, right? It all adds up over time. Cool. What do you do if you keep having a string of losing trades? Well, definitely you have to find out why you're having a string of losing trades. Is it because of you? Is it because of the market conditions? Or what exactly is going on, right? So, for example, for me in February, first half of February, fantastic. I was having a great time. I had every single day was a green day for the first half of February. Second half of February, I had a horrible time. I ended red both those weeks. So the first half. Um, I think it was like I traded 9 days and I ended red 7 days out of the nine. And I'm like, all right, I'm taking my setups as I always do. What is happening? Like, what is a new variable that may have been added into the market? Um, After the second half of February, Trump started talking every single day. And the specific setup that I continued to lose, every time he would talk, it would set up, and then I would lose that trade. The days that I would end green or make money on that trade is the days that he did not talk. So what I took away from that period is whenever Trump is speaking, I am not taking that setup at all. Even if it sets up perfectly, I'm leaving it alone because the results are not favorable for me, and I'd rather just avoid it. Again, if I don't take that setup for a month, it is what it is. I have the rest of my life. Who cares? Also, volatility has increased a lot, right? The ATR of YM, for those who trade the Dow Jones, I think it's about 7 to 750 a day. Before February 20th, it was about 5 to 550 a day. So we're pretty much we increased by 200 points, which is a lot for me. Generally, on average, there'll be like 40 to 60 point candles. Right now, we're getting 90 to 120 point candles, which is crazy. So I've had to size down from using regular mini contracts to using micro contracts, because using the mini contracts would bring my losses to a lot more than I would be comfortable with. Sure, I'll be making more money if I use my regular size as before the volatility came in, but I'm not willing to take that risk personally. So, Kish, what I would say for just to recap, definitely see what's going on. Is it something that you're doing? Is it market conditions? Is it a mixture of both? You know, what's going on exactly? That way you can get to the bottom of it. And always be honest with yourself. Because I had some people who were like, oh, you know, the market sucks, this and this and that. And I'm like, all right, what changed? And they're like, oh, well, you know, I haven't been as patient. And I'm like, all right, well, so it's like, it's not really the market, it's you not being patient. So, you know, be honest with yourself, figure out what's going on. That way you can tackle it appropriately. Cool. Let's see. Doesn't look like Alex is here. Lay, I don't see you in here. If you are in here in another nickname, definitely let me know. Carmel, trading psychology and passing evaluations. What questions did you have? Hey, thanks for coming, JT. I'll put the recording tomorrow at 12 noon. I'll see you for the next one.
I guess my only question would be how would I stick with to my trade setups, but we've already went over that. That's my only question. It's just me sticking to it.
Well, from my experience with working with you and from what I've seen you do, you know what you're doing. You're good at what you do. Now, the biggest thing is just showing up every day, right? If your setup sets up, just take it. Again, like I mentioned just now with the volatility increase, if you were using like let's say 3 or 4 or 3 or 5 contracts or whatever, you might want to bring that down because your stop loss instead of let's say being 150 or 200 points might be like 300 or 400 points now. So that risk is almost doubled. So you may want to use like half of your position size. Generally, you want to keep your losses and your position size similar in that way you're not like getting these big fluctuations where you're let's say making like $200 and then you're losing 100, then you're losing 300, then you're making 100 or making 300. You kind of want to have your risk kind of in the same area, right? Like for most of my trades, on average, it's like 200 to 300 per trade that I lose. The only setup that I increase my risk is the W setup, or you know, the double bottom for those who know about it. Um, because when it does win, it's a big winner. So even if I take a $500 loss on that trade, the winners are going to outweigh the losses. Like for example, for you and your setups, even though your win rate is low, the return that you get on those is really big, like 400 points or whatever it may be. So even though your win rate may be lower, because the wins are so big, they outweigh the losses. Just have to keep the risk kind of in the same area. That way, you know, they're not overtaking the wins when you do lose.
Heard that.
And as always, this is kind of for everybody, and even myself sometimes. Um, you need to let go of the outcome that you want with trading, whatever that may be. Buying a new house, buying a new car, bettering your situation, whatever that may be. You got to let go of that because that's going to cloud a lot of your decisions and it's going to create frustration, right? You know, it's going to take as long as it takes. If it takes a month, great. If it takes a year, great. If it takes 2 years, great. It is what it is. The biggest thing is just manage your risk, show up every day, or at least when you can. If life gets in the way, do what you got to do. Life is life. Um, but don't get too caught up in what you want from the market because it's going to cause a lot of unnecessary frustration in my experience and in my opinion from what I've seen. Um, I saw this post from this dude on Reddit, I think yesterday. I think it was yesterday or this morning, where he's been trading for about 5 years now and he's still not profitable. And what he wants with trading is, I think financially, he's not in a good spot and he wants to quit his job because he hates his job. But because the outcome has control over him, he keeps on over leveraging, not respecting his stop losses, and keeps on blowing accounts, which is kind of ironic because you're over leveraging to get to your goal faster, but you're actually getting further from your goal because you're blowing accounts and over leveraging, right? Whereas if he were to risk accordingly and follow his plan properly without over leveraging, he probably would be at where he wants to be, right? So whatever it is that you want, the market doesn't care about what you want. The market doesn't even care about us at all. The market's going to do what the market does. We're just here to take our piece from it, right? So as always, just have patience. It's going to come. It's just being patient with it, right? So where am I going with this? I think that's kind of it. Yeah, just take your time with it. It will come. Just take your time. The market's not going anywhere. And again, don't. One thing that I actually want to mention, I was going to make a video about this. I'll probably make it this week for those who aren't here. Um, I saw this video by Anmol Singh. He's a trader coach. He was on the trading psychology conference with me for those who attended it a lot in February. But he mentioned about, man, what was the context? So I don't want to butcher it. The idea is that one, losses are inevitable, right? Like I just mentioned, for me, the second half of February for me was horrible. I ended red those 2 weeks. It is what it is. We should never, ever let one red day or one red week or one red month get us over the edge, right? Because we still have a whole year to go. And he gave a good analogy that I really liked, where he's like, you don't hear Amazon or Apple being like, oh my God, guys, we had a horrible day of selling iPhones or selling product on Amazon. No, they come once a quarter and they're like, hey guys, here are our results for the quarter for these last 3 months worth of data. And this is what worked, this is what improved, so on and so forth. So I would encourage you guys to do the same, right? Instead of being so caught up in one red day and blowing your account because you're ending red on one day, look at um, your overall progress, right? I had a meeting with a student today, and he was feeling a little discouraged, and I had him bring up his trading journal. And for the last 5 days, he's been green. And February, he did well. There were some spotty areas, but he did well overall in February, and he's been doing fantastic in March. And for him, I'm like, let's look at the big picture, right? You're getting frustrated because this specific setup is not working out properly, but let's look at the big picture. You had all green days in March. You're doing well. February, while you did have red days, you still came up on top green. So there's progress there, right? And to me, being at break even or green is progress. I would even argue that being red but following your system is also progress. Because again, we can't control whether it's a winning trade or a losing trade. It is what it is, right? So hopefully that made sense. I don't want to continue going down this rabbit hole and tangent, but just look at the big picture, right? Look at your performance overall. And with that being said, I'll go on to the next question. Did that make sense to everybody before I continue?
Yes.
Yes.
Sweet. Cool. All right. Let's see. You guys can put more questions in the chat if you want to. Ryan, are you still here? Yeah, Ryan's in here. Ryan, you mentioned you're getting into futures and you're looking for tips and advice. Great question, Tim. Let's see. So for daily trades, so I'm getting same week expirations. So if it's, let's say, a day trade, I'm getting the one that expires that week, that's on Friday. And if I am taking that setup on Friday, I'm reducing my risk to, let's say, like I usually put 10% of my account in each trade. But on Fridays, I usually do 5 to 7% of my account in each trade just because my risk is gonna like the percentage is gonna be increased because it's a zero DTE. And there's theta to account for as well as, the crazy swings when it comes to zero DTEs. I don't trade indices anymore like SPY, QQQ, IWM because I just trade futures, which is there's no theta there. So if I were to trade the indices, I would just do one or two DTE. I never do zeros on them. That's just personal preference. And it's usually an at the money contract. Usually for Tesla, like right now that the IV and the volatility is pretty high, I'm usually going out like $5 to $7 away from the current price, just because the volatility is a little higher than I would like, and I rather not pay twice as much for an at the money contract compared to before. So I'll usually go $5 or $7 a little bit away. I definitely do, Kish. I definitely tweak my setups if there is room to tweak it. Let's see, Ryan. You normally do options, but the small account tends to be severely limiting and managing risk. So I'm going to try out futures, but wanted to know if there's something you would tell your younger self before you started with futures, assuming they have watched your intro video. Yeah. So when it comes, so I'll say this: if I would start trading again, I would never have touched options because futures, I freaking love futures. There's no theta. It's basically just price action. Um, and it's just, I'm taking the exact same setups with no theta, which is why I love futures. I still trade options because I just been trading it for so long now, and it's just, more money to be made. Um, but anyway, before I get into that tangent, what I will tell myself is before you use your real money, especially when it comes for futures, you want to paper trade because you want to be very clear on what your setups are, right? Like, for example, let me bring this up so I can show you guys and we can see it together. Let me just bring up Discord real quick. Can you guys see my screen on the Discord? And I might
Yes.
actually have to. All right, cool. Hopefully you can see this. It might be a little small, but we'll do what we can. So what I will tell myself if I were younger again or starting brand new from being a new trader is focus on developing your system. Of course, your rules and things like that will come with experience and time and what works and what doesn't work for you. But this is pretty much my trading system. These are the exact setups that I look for every single day. I have them kind of organized here. Um, For those who were in the Playbook Masterclass, you know the exact details of all these trades. But definitely, patience is definitely key. Being very clear on what your setups are. Oh, cool. I could zoom in. Nice. So being super clear on what your setups are. Um, being patient in the sense of only take the absolute best setups, meaning if a setup appears and it's like an okay setup or I'm not that confident, just skip it. It's not even worth it because you don't want to take some good trades and then a bunch of poor trades. It doesn't make sense. You're just kind of just giving money freely away when you do that. Also, understand that not every day will be a winning trade, and that's okay. Like I mentioned earlier, you don't want to be married to any single day or any single week, right? Um, have proper risk management guidelines, right? Understand how much you're willing to lose um, based on your account. So, since you're going to be doing a prop account, especially for prop accounts, understand that it's all a mind game when it comes to props, right? You want to treat your prop account the same way, in my opinion, you would treat your real account because you don't want to bring bad habits from one to the other. Like if you over leverage on your prop account because it's just quote unquote a prop account, you might do that on your real account. You might lose a lot more than you want on your real account. Um, for prop accounts as well, even though they give you a 50K account, you actually don't have a $50,000 account. The account size is really the drawdown. So let's say with Top Step, if you get a 50K account, the loss, I think that the drawdown is 2,000. So you really have a $2,000 account. Would you get 3 mini contracts on a $2,000 account? Definitely not. I would definitely not use 1 mini contract on a $2,000 account. I'll probably use 5 micros, sure, depending on the setup. So risk management is definitely going to be key. Don't try to focus again on the outcome, which is passing the account. You want to go into it with the mindset of this is my account, right? And if it's your personal account, there is no payout, there is no passing. It's simply just following your system and then getting paid out from that, whatever that may be. Turn off your P&L because it's irrelevant to your trading system, first and foremost. If you are prone to going on tilt and losing control, set up a daily loss limit in the platform, which most allow you to do. So if you do go on tilt, you don't blow your account. Um, some other things that I'll probably tell you is don't get caught up in like, oh, it's only $50 or $100 for the account that I'll just lose. That money adds up. I know people who have spent more than $10,000 on prop accounts and never got one payout because it's just $50. Those $50 add up. So, yeah, that's some things that I would definitely tell you. Some questions that I have for you. Are you clear on what your setups are? Do you know what you're going to be looking for, what you're going to be avoiding, so on and so forth? Also, Kish, this is OneNote. So the Microsoft's OneNote, I just type it in there. Also, Ryan, what ticker are you trading on futures? Yeah, so let me bring up the chart so we can go back there. So it's ES, then SPX, well, ES slash MES, SPX, SPY. Then there is NQ, MNQ. I think it's NDX. I could be wrong. and then QQQ. Oh, whoops. If the index for NQ is not NDX, somebody please correct me because I don't trade it. Then it's QQQ, then RTY, M2K for the micro. The Russell one, I always forget what Russell's index is, so I'll skip that for now. So IWM, and then so on and so forth. YM slash MYM, and then oops, I forget the index for Dow Jones because I don't trade it either. And then there's DIA for the ETF, right? So I would definitely say if you are used to SPY, you can trade MES, which is the micros, because it's the exact same chart. Just one is futures, one is the ETF that people usually use for options. NQ, NQ, if you're a new trader, I'm personally biased against it just because new traders tend to go to NQ, and I get it, super volatile. But those wicks will get you. So if you are going to trade MNQ, um, definitely pretty much what Carmel said. MNQ will make you depressed, to say the least, if you don't know what you're doing. So definitely paper trade MNQ and make sure that you're consistent with it before you go live because it can go south real fast. Even with NQ, it depends how big your account is, right? Because let's go to NQ real quick. This is why I usually tell people not even to touch it, especially if their accounts are small. Let's look at the 5 minute on NQ. Let's see. 67-point candles. Actually, that's today. Whoops. Let's go on Friday. So we got what? 38, 50. So between 40 and 60-point candles, which is, that's what, $20 point. So let me bring on my calculator because I'm too lazy to do math in my head right now. So 30 points times 20, that's $1,500. So NQ is averaging $1,500 to $3,000 in a single 5 minute candle. If you have a 50K account on Top Step, let's say, or other ones that the drawdown is 2,000, you are one candle away from blowing your account in 5 minutes. So micros is definitely the place to be because even with micros, they go a long way. So NQ, you better have a big account and you better know what you're doing because that account is going to be obliterated very, very quickly. Somebody messaged me last month. I think they had a $2,000 account and they were trading NQ, and that account evaporated in 2 days. Personal money. So can you explain the drawdown a bit more, please? Um, what specific question about the drawdown do you have? Also, Kari, I'll get to your question next about risk management. I'm going to ask some questions to be a little more specific. But yeah, Ryan, what specific questions regarding the drawdown, like how it works or what specifically? Oh, what is drawdown? Gotcha. What prop firm are you using? So I could bring up their website and we can see it together. Apex. Top Step is way better in my opinion. All right, let's bring up Apex. Oh, sweet. Top Step should be available in Canada. All right, let's go to good old Apex. It was my first prop firm, so they finally released wealth charts. Interesting. What account did you get? What size? $100,000? Cool. Uh, This is the slowest user interface of all time. So $3,000 drawdown, or to be specific, trailing drawdown. Whoops. Trailing drawdown. So the drawdown is the most you can lose in the account before you blow up the account. And you need to either pay for a reset or you got to get a new account. Usually cheaper to just get a new account than pay for the reset fee. So your starting balance is 100K. So if you go to 97,000, your account's toast. It's done. However, this is a trailing drawdown, meaning this. The starting drawdown is 97,000. If you hit that, you're done. Now, if you go to 101,000, you make $1,000 profit. The trailing drawdown follows you, meaning if you go from 100K to 101K, the most you can hit in the account now, instead of being 97,000, it's now 98,000. So it follows you, which I don't like. Top Step doesn't have that. It has the end of day calculation for the drawdown. So and this is realized or unrealized, meaning if you hit 101,000 in a trade and you don't secure that profit and it comes back to 100,000 and you get out of the trade, you're pretty much back at square one, but the max you can lose now is $2,000 because it followed you to 101,000. So it went from 97 to 98K. Does that make sense? Cool. So you have to be mindful when you are trading these props with trailing, you can't really have the luxury of holding for big moves. Because if you're up $2,000 and that pulls back $1,000 or $2,000, your drawdown has increased. Now, if you have once you pass the evaluation and you have like the funded account, from there, once you hit I think the drawdown for the 100K is like 102,700. Actually, no, I think it's 3,000 plus $100. Then it stops following you, if I recall correctly. So on the actual account, when you hit 103,000 or 100,000, well, I can't even speak anymore. $103,100, the drawdown is fixed at 100,000. So even if you go to 105,000, it's still stuck at 100,000 plus $100. So from there, you really want to make a buffer so you can have some room to take money out. Even though with Apex's new withdrawal, you can only take out whatever's above the buffer, which is 2,700. So $102,700. You can take whatever you want above that. Minimum withdrawal is $500. So there's a video on my YouTube channel that I pretty much go over prop firms in detail, so you can check that out if you want a refresher. But that's pretty much what I will say for now. So Top Step is end of day calculation. So I can make a 2,000, I can lose 2,000. If I'm back at 100,000, my drawdown is still at 97,000. It doesn't follow me with an active position. I personally love Top Step and Top Step X, which is basically just Trading View, which you can put trades on. It's really efficient. I have a video on my YouTube channel about using Top Step X. So you can check that out if you kind of want to see what it's like. That way you can kind of see which one is better for you. I think it's like $5,000 a month, which is fine because you copy two accounts, it's $10,000 a month. And even then, $5,000 a month, that's beautiful. $60,000 a year. I think after the second or third month, they remove the limit. Or after 3 to 5 payouts, they remove the limit. I always forget. I gotta double check on that. But yeah, I'm definitely a fan of Top Step. Cool. Uh, Kara, you mentioned that most of your questions were answered. Do you have anything else that you want me to go over in terms of risk management and like knowing when to stop for the day? Oh, actually, I'll answer this question. Knowing when to stop trading for the day. I have a max loss or max of 3 losses per day, or $500 to $750 loss per day. That's what I'm comfortable with. And that can vary depending on the individual. But usually 3 losses and I'm done for the day. It doesn't matter if it's like a win, loss, 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 or a win, loss, win, loss, win, loss, win, loss. I'm done after 3 losing trades. Here is a new behavior for you and everybody else to do, which is what I do. As soon as you make your money, turn the charts off. That way um there's no what's the word that I'm looking for? There's nothing enticing you to keep on taking more trades. And as Randy Howell says, yeah, there's no temptation. There we go. That's the word I was looking for. Thank you. Um, as Randy Howell says, good emotions, bad emotions are not allowed while you're trading, because while bad emotions may have you revenge trading or over trading, good emotions will make you also overtrade and stay longer than you should, and you'll give money back, which is what you don't want. So for me, if my first setup hits, I make $740 and I'm done for the day. Usually in the first hour sets up. If it's not there, I'll kind of just stick around. If that hits, I turn everything off. That way I'm not taking any more trades because I know myself. If I see another setup, I'm going to take it. So I get off immediately. Or if it's 12 noon, I get off immediately. I don't stay on the charts at all. Once 12 noon hits, I turn everything off. I go make lunch. I go relax. And then I'll just support people who message me or the groups I support, my group, stuff like that. But yeah, literally get off the chart. A lot of the things that I see traders struggle with, there's very simple solutions. Um, if you find yourself over trading and you don't want to overtrade, turn the chart off and go do something else. As Tony Robbins says, what is it? If you stay in your head, you're dead. If you keep on telling yourself, yeah, just one more or just two more, you need to physically do something with your body to have your brain follow it. Because I can be here all day. Yeah, I'm not going to take. Here's one for you guys that I'm sure everybody has experienced. How many times have you had a talk with yourself saying, I'm never going to do this again? This is the last day that I do this. No more. Then the next day comes and you do the exact same thing you said you weren't going to do. I've been there many times. And what has worked for me is doing something different physically with my body. So if I start to get emotional, I get up from my desk and I go outside and sit in my balcony until I'm relaxed. Then I come back and get back on my screen because I know I already know myself. I know for an absolute fact, if I stay on the chart, I'm going to mess with the trade and get out earlier than I should, or I'm going to mess with my stop loss. So I get up from my desk and I go do something else. I set my alerts and then I just wait. Because once I get in my trade, my stop loss and take profit is already set. My job as a trader is done. There's nothing else for me to do. So obviously, if your work is not as lenient for you to be able to move around, literally turn off your charts, set an alert, turning your charts off. Your job is done as a trader. Go do something else until your alerts go off, whether that's for your stop loss or your take profit. Because you looking at the chart is not going to make it go any quicker or any slower to your target or your stop loss, right? Just understand that that is perfectly normal. Our human brain was not designed to trade because trading is uncertainty, and our brain absolutely hates uncertainty. Thousands and 10 thousands of years of human evolution is not going to be fixed because you read a book. We need to also physically do the things to get us out of that predicament because our brain thinks there's danger. That's why your brain is going to make you do silly mistakes to get you to stop doing what you're doing, whether that's blowing an account, messing with your stop, taking profit too quickly, whatever it is. It's going to self sabotage itself to make you stop doing what it does not like. So understand that. Like, even for me, I'm not perfect, right? I already know myself. That's why I stop at 12 noon. I know that if I stay after 12 noon, I am going to take more trades if the setup is there. So hopefully that made sense. Kish, you mentioned if the setup is
So,
there, why not take another trade?
yeah, I was thinking, let's say you have more time to stay on the charts, right? And let's say you can stay till 4 o'clock market close. Then, if the setup shows up, why not take it?
So for me, I quit my job to trade full time to have more free time. And the least amount of time I can spend on the charts, the better, because I didn't leave my job to now have another 8 hour job, right? Whatever the market gives me in the 2.5 hours that I trade, I'm cool with that. Now, um, also, for some people, it may work to be on the charts more than I do. However, me knowing myself, I have my group to support. I have my students to support. I have members of other groups that I support. And of course, life things. So I rather avoid spending more mental capital than I need. And trading can be very mentally exhausting. So the least amount of time I can spend on the chart, the better for me. And then I can go enjoy my day.
Got it.
I do know some people who trade the New York session morning and afternoon. Shout out to them. That's not me. But again, trading is really about knowing yourself and knowing what works for you and what doesn't. And what I do works for me. It may not work for somebody else. It's really about discovering yourself, which is why I also love trading. So
Yeah, that makes sense.
sweet. Uh, Ryan, yeah, definitely, right? So if you make most of your money in the morning session, only trade the morning session. Because if you find yourself losing money in the afternoon, one, you're not as focused as you were in the morning. Your brain is probably depleted. and you can't focus as much as you usually can. And, there's probably other distractions that might come up. So if you make mostly money in the morning, like I do, only trade the morning time and then go enjoy your day doing whatever it is that you want to do. Granted, if you're still working, you can at least focus on your work uninterrupted by the charts. So that's what I would say. Cool. Any other questions? Wendy, you mentioned you had a question about being consistent. Um, Gonna need a little more details of that. It's a little vague for me.
Oh yeah, it's something about like having a winning day and then the next day you're losing kind of like everything. It's kind of realize like you're not really profitable because like the more money like okay, whenever you have a win, the next day even like if you do your homework and then you do whatever you can, you keep losing money and then you cannot have like an entire week of winning or even like having your account scaling up. So I just wanted to know, like, how do I can overcome something like that?
So the question is, how do we overcome doing well one day and then kind of giving it back the next day?
Yes, sir.
So first question I have is why are you giving it all back? Right? Like, are you over leveraging, or is it simply are you you're taking too many trades? Like, what specifically is going on? Right?
I think it's the grid.
So now we're getting a little more clear on what's going on, right? So now let's go over some examples. Kari, or those are the link to my YouTube channel and the Discord group if you want to join. So Wendy, I'll ask you is when it comes to consistency, so let's break it down, right? I'd imagine the consistency you meant is like being consistently profitable, right?
Yeah, definitely, definitely.
Cool. So with the consistently profitable part, we got to be straight up with ourselves, right? What's going on? Like you just mentioned, are you over leveraging? Are you being greedy? So on and so forth. What's going on? Like, what is causing the inconsistency? And then from there, we can get clear on what needs to be worked on, right? Because if it's consistency of, let's say, not being greedy, it's pretty straightforward. Literally take your profit when you're supposed to. It's replacing one behavior with another. You want to be consistent, take your profit when you're supposed to. If you get emotional and you start getting greedy, you start your breathing practices, turn off your charts, and set your alerts so you're not getting that feedback from the chart. So you can slow down the emotional process and you can come back to a logical state of being. Because when we're greedy, or when we're on either side of the spectrum, when we're trading, is dangerous and it's going to mess us up. So um, that's one thing that I'll say when it comes to being consistent. Another thing is showing up every day, or at least the days that you can trade. I know there's people who may be parents who have pretty busy lives. Do the best you can, show up when you can, and just follow your trading plan to the best of your abilities. One thing that I'll challenge everybody here today, for those who are in my group already got the message, but take note of whatever your balance is today. And from today until the 1st of July, a challenge that I have for you guys is follow your trading plan exactly as you have it written. Respect your stop losses, take your profit when you're supposed to, respect your rules, your disciplines, etc. And then keep track of your performance and your progress every month until July 1st. And then, of course, we can all reconvene and we can talk about how our progress went. Did your account grow? Is it kind of break even? So on and so forth. and we can get proper data on the consistency, right? Because while you shouldn't really focus on your P&L is just an outcome of following your system, right? The biggest thing is just following your system because that's what the money is coming from, right? Like if I ask you, is being greedy part of your system? You can answer. It's not rhetorical.
Not really. I mean, like, one of the things that I'm really struggling with it, other the fact than being greedy, it's I can't really deal with losses. Whenever like I lose a trade, I feel like I need to get that money back. Sometimes I'm over leveraging, and
Mhm.
if I take another loss, that would cost like it's kind of like I'm losing more money, and I say, man, I need to get that money back. And by doing that, I'm not really. Sometimes I even like neglecting my setup. I try to do the best that I can to get the money back, and then I over leveraging and stuff, and I end up losing more and more.
That's a simple one. Well, yeah, that's definitely revenge trading, as Kish mentioned.
Yeah, and
Um,
sometimes it gives me mad headache, and I'm chasing like trade, even if I'm not waiting on the market to react or the setting zone. The market is just like passing that zone, and I'm gonna chase it, and I'll like kind of like set up my stop loss at a certain level. When the market come back, that was gonna kick me out because I didn't wait for the market to react on it at the exact zone that I was waiting for it.
mhm. Now we're getting to the juicy part, which I love, getting to the root cause of what's going on. So the issue here is not really greed. That's an outcome of whatever the actual root cause is. You mentioned when you lose the money, you feel like you need to get it back. Now, this is
Definitely.
where we start to get to the actual solution and trading with awareness and being mindful, right? Why do you feel the need to get that money back when you lose it? What does the loss mean to you?
Man, that's a weird question. I never asked myself about it.
I'll give you an example for myself. Maybe it'll make it easier for you when you go through this yourself. So we're what, 2025? In 2021, for those who might know about this already, but when my mom was sick during that time, I wanted to just make a bunch of money in my trading. So I can, thank you, Carmel. Yeah, we definitely got to the bottom of what's going on with her. So anyway, so in 2021, when my mom was sick, I was pretty much the only one really taking care of her at the time, um, per se. Anyway, it was a lot of pressure for me to kind of take care of everything and her. And I'm like, all right, if I just make a lot of money quickly by over leveraging, I can get out of the situation. I can, leave her with a good amount, and then I can just leave and then go, as they say, live my best life or whatever you want, because I wanted to leave the state. So when I lost the trade, the loss affected me because it to me, it's taking me further away from my goal that I wanted, which was to get out of that situation, which would then get me upset and frustrated, which would then cause me to over leverage, revenge trade, and try to get that money back. Right. So we can see it's like it, it's not really the greed that got me or the lack of discipline. Well, that too, but it's more so what the underlying cause was, which was I wanted to get out of my situation quicker than I was supposed to, and I was trying to force it to happen quicker than it was supposed to. And then it wasn't until I understood that, hey, this is going to stop whenever it stops. It is what it is, right? And by me over leveraging and revenge trading, that's taking me further from what I want, right? So it's really getting to the bottom of, what the root cause is and what's causing that. that way we can bring that to our attention when we're trading, right? Like a lot of the things that you mentioned, your focus is on the money. I never heard, oh yeah, like me focusing on my setup and then I lose the money. It was like, yeah, like I want to make the money and then I lose the money, then I want to trade to make back the money. It was never, let me take a step back and follow my process, right? So the language that we use is always going to be a big tell on what we need to work on. So for you, I would say you need to focus on shifting your mindset and your focus from the money to the system, because the system is where the money comes from. And then when I asked you if being greedy is part of your system, you said not really. Not really is not an answer. It's either yes or no, right? So we got to continue to dig deeper within ourselves and figure out what the root cause is, whatever that may be. I'll give you two more stories. Generally, with some men that I've worked with, for some of the men who may be fathers here or husbands or what have you, this might resonate with you. Um, for the women who have husbands and their husbands trade, all I ask is that you support them as best as you can. Anyway, so as men, as we already know in society, we're trained to be the providers, right? And if we're not providing, then we may be looked down upon as men, right? Like we're not doing our duty. Now, in trading, if we lose money and we're not bringing money, that can trigger that um, thought process, right? Like, oh, I'm not providing for my family or for myself or whatever it may be, which can cause you to go down these spirals. So understand that you as a, I'm kind of going a little off topic, but understand that you as a trader and you as a human being are two very different things, right? Whatever happens in trading is not a reflection of you as a person. Those are two very different things. And I see this a lot with some clients that I have that are like high up there in like corporate world. When they lose in trading, they start to take that as a personal thing because in corporate world, the way you make things happen is by, you know, um, what's the word or phrase that I'm looking for? Like, you're like a doer, right? Like you take initiative and you do all these things to get promoted and get recognized, etc. In trading, it's the exact opposite. In trading, there's nothing you can do in the context of like trading more to reach your goals faster. In trading, you do the opposite. You actually make more money by doing nothing in the sense that you just sit and you wait for your setup. And then when your setup comes, you press the button, you get in, and then you wait some more until it hits your profit target or you stop out. That's pretty much trading. So when you start to force things and try to bring that same mentality, like I gotta, like the more I do this, the more money I'll make, or I'll reach my goals quicker, or I'll be a provider, or whatever. You need to take a step back from that and understand that you as a human being and you as a trader, two very different things. Hopefully, all of that made sense. So, wrapping it up, um, I encourage everybody to sit with yourselves. A good book for this is Change Your Mind by R.J. Spina. And you can also check out Breaking the Habit of Being Yourself. Oh, it looks like my camera died. Whoops. Well, he's going to get audio from me moving forward. Anyway, so um, yeah, hopefully all this made sense. Spend some time with yourself and really get to the bottom of whatever it is that you need to work on with yourself. Because if you're not trading mindfully or with awareness, then you're going to have a lot of trouble when it comes to your trading. And these same behaviors are going to continue to come up until you understand what's causing them. And then from there, you can navigate the markets better. Like realistically, I was talking to a student about this morning. This probably gonna be the last thing, and then we'll wrap up. But anyway, I was talking to a student about this today, where it's interesting how if you're taking your setups as you always do and you're doing great and you have a great week, a great month, whatever it may be, you're super happy, you're excited, everything's going great. However, you have a red week or a red month following your setups, and now you're upset, you're angry, you're frustrated, you're this or that. In reality, of course, as you develop your emotional being in trading a lot better and know yourself better, you can disconnect yourself from whatever the outcome is. Because if you took your setups, you should actually be happy in the sense that, hey, I did a great job this month. I followed my setups. I took my trades exactly as I'm supposed to, and I did well. Or I did everything right, but I ended red, and that's okay. The biggest thing is really being okay with all of that, right? Because when you start to get upset, that's when problems come up. Revenge trading, over trading, comparing yourself to others, and then entitlement comes in too. I've been doing this for 3, 4 years. I should be profitable. It's like, not really. You could be doing this for 10 years. And if you're not doing the right thing, you shouldn't be profitable, in my opinion, at all. You should be exactly where you are at because you only deserve, in my opinion, maybe a controversial statement, but you only deserve whatever effort you put into something, right? I'll give you a lighthearted example. If you're in line waiting for food and you've been waiting for 5 minutes and it's your turn and somebody comes and cuts in front of you and they're like, I deserve to be in front of you because yes, you'll be like, yo, if you don't get to the back of the line, we're going to have a problem, right? So the same thing with trading. Just because you've been doing this for 4 or 5 years, but you're still not having the proper behaviors to deserve the outcome that you want, you actually don't deserve to get the outcome that you want. So, yeah, that's pretty much all I have. I can go off for hours and hours and hours because I love this stuff and dissecting the human mind and trading, but I'll respect the rest of everybody Sunday. Did all that make sense? I kind of went off on like a huge tangent, but did all that make sense at all?
Yeah, it's all good. Great stuff, Dizzy. Great stuff, man. I appreciate that.
So, one thing that I'll encourage you to do, Wendy, and everybody else that may be struggling with this, or those who are watching this, get a journal and like write down exactly where you're coming up short in your trading, and then what are 1 or 2 things that you can do to make the situation better, whatever that may be. And then once you have a plan of whatever that may be, do that for a month or two straight and then see the results. And while I can't guarantee anything, you will probably get better results than you have been. Cool. So before we wrap up, what was everybody's biggest takeaway? You can put it in the chat, come off mute, whatever you want. Also, for those who are new here and those watching the recording, the same link that you used to sign up is the exact same link that you'll use for the next session. So you can go on the same link on Calendly, sign up for next month if you want to, and so on and so forth. And I'll see you for the next one. But yeah, for those who are watching the recording and never signed up, you can go to, if you're watching this on YouTube, you can check in the comment or the description, or you can go to the biography on the YouTube or wherever you know me from, and I'll have it in my bio, either my link tree with all my links or what have you, or just send me a DM and I'll send you the link so we can talk. But yeah, what was everybody's biggest takeaway before we wrap up? A 100%, Kish. Trading psychology is extremely important. I'll give you another example as I wait for other people to type. I have a buddy of mine who he's been trading for longer than I have. I think he's been trading for about 6 to 8 years, and he's still not profitable because he refuses to get his risk management under control and over leveraging. And last time I talked to him, he was like, "Oh man, I got this new course and this and this and that." I'm like, "Dude, it doesn't matter how many courses you get. It doesn't matter how many new things you find out. You know how to trade. Like he's a good trader. He knows how to make money. But until he gets his risk management and over trading down packed, he's going to be in the same cycle, blowing accounts over and over and over. So the psychology and discipline part is to me the most important. Because once you know your setups, that's the easiest part. You just do the same thing day in and day out. Yep, definitely. If you stay in your head, you are dead. Shout out to Tony Robbins. Definitely let go of the outcome and just follow your system. Understand that we are human, so we are going to get emotional. We are going to feel frustrated. It is what it is. As my life coach and mentor told me, shout out Jacob, um, he always told me, love, appreciate, and enjoy the process. I have that reminder go off every single day so I can always be reminded whether I'm frustrated on where I may be or whatever is going on. It's just a little reminder, right? We're here to really enjoy and appreciate the process on what it's teaching us and how it can help us grow. So always have that in mind. Ryan, definitely discipline is key. Following the plan, managing your risk, and all that good stuff. And yep, definitely reevaluate what you're doing right and what you're doing wrong. That way you can improve. 100%. Lastly, oh yeah, definitely journal everything. Tim, I'm not sure if you've seen it, but there's a video on my YouTube that I have that I pretty much go over my exact journaling process. So definitely check that out if you haven't already, as well as like a risk management video and all that good stuff. Felicia, the market definitely doesn't care. One last thing, do I have a journal template that I might be able to share? Yeah, Ryan, as I was just mentioning to Tim, let me bring up this real quick. So if you go to the YouTube channel and you go to the playlist section, go to, where is this? The Psychology of Trading and Building Your Trading System. Bring up that playlist. There's a full in-depth guide for journaling, my exact template that you just asked for, Ryan. You'll find it in there, as well as risk management, pretty much how I manage my risk, and a bunch of other like trading psychology stuff that you guys can check out, which I recommend if you're needing some guidance there. But yeah, last thing that I'll say is, you guys are doing great. You guys showed up to this class, which shows me, and that shows you as well, that, you guys are serious about this, right? You want to improve and you want to do better. So, give yourself a pat on the back, round of applause, whatever you guys want, and always celebrate yourself. You guys are doing great. You showed up, and just keep on improving every single day as best as you can. We're human, so don't beat yourself up too much. Other than that, thank you guys for coming out as always. Appreciate you guys for asking your questions. I will see you guys next month. The last thing that I'll say before I forget, next week is the Let's Learn with Advent series. I usually have it on Sunday, but there's a event that I want to go to every third Sunday, which I used to go to that I stopped going to. So we'll probably do it next Saturday. We'll move it from one day earlier. So next Saturday is going to be the Let's Learn with Advent series, which is pretty much what we did today, but with the other groups that I support. So that'll be on the YouTube channel live. We'll do it at, what do I have the schedule? At 7 p.m. Eastern time on Saturday. So if you are able to attend, definitely pass by. I'll make an like a little announcement in the YouTube channel in the community or post section. But yeah, it'll be on the YouTube channel, 7 p.m. Eastern time next Saturday. If you guys can come and ask more questions, that would be great. If not, I will see you guys when I see you. Other than that, enjoy your Sunday and let's make this week a good week by following our system. I'll see y'all.